Rahul Shah, Associate VP, Group Leader, Equity Advisory Group, Motilal Oswal Financial Services, joining us this morning. Of course, Rahul, first off, I mean, it's very difficult to kind of dissociate ourselves from global markets, but today the headline is going to be bigger than what the global headline seems to be. What's the take with regard to HDFC Bank?
Hi, good morning. I think obviously, I think global markets is going to get which reflection which you're going to see in the Indian markets as well. I think post our yesterday's closing of markets, I think seeing the global markets action, and I think maybe we will also likely to open a percent lower for that global thing. And secondly, but I think that HDFC thing which has come up, I think which will also fuel more to the Indian markets. But I think to understand more the nitty-gritty what exactly, what stand and all, I think will be better be known post their call. So I think that's going to be more key important. But prima facie, if you ask me, the way the ADR has reacted, which is down 7%, and how the Indian markets in terms of how HDFC is going to react, obviously is going to contribute. But I think vis-a-vis, if I look at entire financial as a space, I think if you remove this negativity, I think rest, I don't think so. Any what our channel checks suggest, I think this quarter numbers also for most of the banks, including HDFC Bank, ICICI, SBI, which are top picks from the entire financial space, looks all right. And I think the asset quality is improved. I think the cost of borrowing also is well under control. So our sense is, I think overall, if you with the recent correction and with the noise what we're hearing from the global, I think financial looks attractive overall. But more to hear from the HDFC call, and then to take a call how this things are going to shape in HDFC Bank.
Rahul, how do you look at the governance premium this counter enjoyed so far? It had a much higher governance premium compared to other banks in the sector.
So I think if you look at it in terms of valuations, if you look at HDFC Bank, I think in last 4 years, I think we've seen the stocks premiumization have been correct and has done nothing if you look at it. And I think the returns are very as good as nil. And if you value the bank today, I think maybe at 700 rupees, the bank's valuation and rest subsidiary of 145 rupees, I think the bank is will do a 56 rupees earning the core banking business next year. And I think so available at 12 times. So I think there's no premium at this point. At this, everything is discounted in the price what it's trading at vis-a-vis other banks. So I don't think so major impact on terms of the governance issue, but what the commentary and what after the call, it's more important to understand from HDFC.
No, so Rahul, sorry, I'm not sure if I'm getting this right. You're expecting it to fall to 700 rupees a piece?
No. My thought process is that the value of bank, the core banking business, is I think around 700 rupees, and rest the subsidiary valuation is. So I think everything is factored, and that's what I'm trying to say.
I get your point. So at 840, you're already seeing a decent valuation run down, is what you're alluding to. But Rahul, right. So therefore, today's fall would be an opportunity, you reckon, to buy?
So I think if you look at it since last 25 years, 30 years of the history of the bank, I don't think so. Any thing which we have seen in HDFC Bank, vis-a-vis we've seen in most of the other banks, would not like to name it, but the entire sector, some of the such crisis. But I don't think so. HDFC has come up with any of these issues. So I feel that I think post-call, I think we should understand, and I think it should be an opportunity, and this is short-lived, whatever the action or the price action gives. And it would be an opportunity for investors to buy shares at low levels.
Very interesting. Okay. So that's the take coming in from Rahul. Rahul, the other one that's playing on the cards within the lending space is Manappuram, where Bain has gotten RBI approval now. We've seen a decent correction on the stock price there as well. Some of these gold financiers still looking interesting to you?
So I think NBFC as a space, I think, and the entire thing has done quite well. And I think obviously the gold financial companies have also done well. So I think more or less, I think is priced at this level. So I think limited upside in Manappuram from current levels. So I feel the better opportunities are in the larger plays like Bajaj Finance of the world. If you want to invest in NBFCs or maybe in a private sector banks or a public sector banks. So I would say that opportunities lies better in this kind of a markets, to stay in a larger place rather than a mid-size NBFCs.
Rahul, how do you look at other banking stocks now, PSU banks? Do you see flight to safety within the banking space towards PSU banks?
So I think PSU banks, interestingly, if you look at last couple of years, the numbers have been decent. Last 2 quarters, strong set of numbers, and most of the PSU banks driven by strong asset quality. I think driven by entire and all-round performance in terms of the segment. And I think if you look at it, I think that's reflected in the prices in Q3 numbers. I think if you look at it vis-a-vis the private sector banks, and most of the PSU banks have outshined the private sector banks. So I feel and just to give you perspective, I think Q3 numbers post State Bank, the robust numbers which they came up with, and I think that is what the re-rating has happened, and the stock moved up, and then obviously because of the market's overall correction, it has corrected. But I think overall, broadly, if you look at it, I think PSU banks will continue to do well as well from next couple of years.
Okay, let me in fact go across to Meryl because she's got the second set of stocks in focus today on our radar. Meryl.
Yes, coming to you with a list of stocks that we're going to keep an eye out for today. Starting with Delta Corp, the company has received GST notices worth around 1,752 crores for the financial year FY23, and they plan to challenge this legally. They've said that the tax calculation used to derive this figure seems to be based on the gross bet value as an input figure rather than the gross gaming revenue, which is an industry-wide issue. So they will be pursuing formal resolution against this. Next up on our list today is Manappuram Finance, after they've seen positive development, receiving RBI's final approval for Bain Capital's 4,385 crore investment into the company. And post this deal, Bain Capital's expected stakeholding in the company is expected to be around 18 to 41% stake, while the existing promoters of Manappuram's finance holdings will be around 28.9% on a fully diluted basis. And this effectively brings in joint control between Bain and the promoters, along with a promoter reclassification, making this quite an important strategic development for Manappuram Finance. Moving on, in the real estate space, we're seeing Puravankara, which has received Maharera approval for one of its new residential tower in an existing project, Purva Panorama, in Thane, supporting its growth pipeline in this project. And finally, Physics Wala, after receiving an income tax demand of around 263 crores, they've stated that the Income Tax Authority has treated investments received from investors, including SEBI-registered Category 2 AIFs, as taxable income, which has led to a higher tax figure. So yes, this was a list of stocks that we're going to keep a close eye out on in today's trade.
Okay, thank you so much for that, Meryl. And you know, that's broadly what we need to focus on today in terms of other stocks. What we'll do is slip into a very short break, continue speaking with both of our guests on the other side. Stay with us. Okay, and on to some exclusive updates coming in from HDFC Bank and what's playing out there. Sources say the exit is not linked to any regulatory or governance concerns. The decision was based on personal differences. Ankur joins in with all of the details.
Yes, sources have informed us that the letter which has been sent by Atanu Chakraborty regarding his resignation had cited ethical issues as well as the practices at the bank. But what we have been informed through sources, there is no regulatory issue which is pertaining to the bank. In fact, we have been told that these were some of the personal differences which were there with the board, and hence this resignation came, and which was building over the time. But for now, a few of the questions which were raised, that whether or not is there any regulatory action which can be taken on the bank. But for that, we understand that till now, there is no regulatory issue per se. But for, as far as the differences with the board, of course, it is wide and open that the letter has cited the reasons for the same, and he is saying clearly ethics issues, while we will also reach out to regulator and have reached out to regulator for the questions whether or not a regulator was informed earlier regarding these brewing issues, which was there for last 2 years. But for now, what we have understand is that what do we understand is that the decision is linked to personal differences over certain practices at the bank, but nothing regulatory issue for now.
If I can ask you, do we have any idea of what kind of practices which he was not agreeing to? And secondly, if there is a board disagreement or a disagreement between the chairman and the management, the board was not able to reconcile these disagreements?
Yes, we did ask these questions to sources, and what we have collected so far, that the executive style of functioning was also in question. What happens is he's a he's a part-time chairman or not a full-time chairman for the bank. So the differences of opinion was there in his style of functioning, what we have been told, and so far, yes, there were communication which happened twice or thrice, and yesterday only the bank called an emergency board meeting, and the decision was taken, and the board was apprised regarding the resignation of Atanu Chakraborty as well as the appointment of KK Mistry.
Your years of covering RBI and the banking sector, do you seen the RBI reacting so fast with respect to replacement of a part-time chairman within hours?
Yes, this was a kind of an emergency situation even for the regulator, because it is systematically important bank, and therefore Reserve Bank of India has given only 3 months approval for KK Mistry, and of course the bank's nomination and remuneration committee will now look forward for the candidate who can be the full-time chairman for the bank, but this was kind of an emergency situation for now for regulator to give approval for KK Mistry for 3 months.
Thank you, Ankur, for that update. We have also now have Aditya Shah joining us. Aditya, how do you look at this entire HDFC saga? Do you think that there is a lot of answering that the management has now have to do to the street?
Good morning. So I think for a large bank as HDFC Bank managing 25 to 30 lakh crores of deposits and loans, there can be disagreements at the board level as to how the bank should really function. Mind you, over the last 2 years, HDFC Bank has had challenges with respect to growth and their LDR. However, the quality of the management should have been that those challenges are restricted to the board level. Those challenges are handled well. That's where the management quality should have come in. Now, this has gone out of proportion for the bank to an extent where the resignation letter clearly states that some issues are there with the bank. Now the management should clearly come out. I think they have a con call at 9 o'clock. They should clearly address what the issues were, how the bank is clearly addressing those issues, and what is the way forward. Over the last 2 years, HDFC Bank has not been good in communication with the investors. They should use KK Mistry as well as the CEO of the bank to address these issues. However, in the shorter term, this is not good news for the bank. Bank was already struggling with the NIMs and the loan growth. Now an added level of volatility in the management of the bank will only scare the investors. But over a longer period of time, the depth of the bank will mean that they will recover from this.
But Aditya, the signs and the signals don't look positive. As you said, differences are there in every board. But to call out and say that it doesn't resonate with me from an ethical standpoint is not something you want to hear from the chairman of the second largest bank of the country, which is known to be a compounder, and where there has been a change in the leadership and the churn in the leadership has been large over the last maybe 2 years.
So, Harsh, to the scale of HDFC Bank, there will be churn. We as analysts tend to overanalyze the situation. Of course, HDFC Bank is a huge employer of manpower, and there can always be churn. So, from my perspective, I don't read too much into it. I will read too much into the fact that the management could not handle disagreements, could not handle at the board level what was really happening. That is a serious concern for me. The first point. Uh, the second point being, there has been a lot of challenge for HDFC Bank over the last 2 years with respect to growth, with respect to NIM, with respect to what strategy the bank should follow. To give you an example, HDFC Bank CEO did not talk to investors 2 years ago, but a change in strategy led him to come on the calls and talk to investors per se to convince them that there's no problem with respect to the NIMs, the LDR, and so on. So the current CEO is no Aditya Puri. Aditya Puri was decisive, was really aggressive in talking to the investors and leading the bank. However, the current CEO is also really very good. We should give him time. We should give him the benefit of the doubt as to what really happened. The management will clarify. Let's not read too much into it. I don't think there is a corporate governance issue as much as I have heard. The Reserve Bank of India has expressed its its support to HDFC Bank. So from my perspective, I don't think it would be a very large issue. I think there must be disagreements which had led to this, and the management must address it so that the investors can move on.
Look at the valuation of HDFC in this whole thing, because you're going to see, we've seen the stock also underperforming other, especially PUC stocks, and with now this governance issue coming into limelight, do you see immediate re-rating of this stock is not going to be there?
Absolutely, there could be a derating for the foreseeable future, at least 2-3 months or 6 months as well, until HDFC Bank really clears out what really happened. From there on, there could be a bottoming out of the stock and the stock could recover. I don't think in the near term anything is going to happen on the stock per se. It also depends on how fast the net interest margin, which has been a major pain for the bank, that really recovers. So as I said, shorter term negative for the bank, longer term positive at a price to book of 1.5, which is the lowest in the last 20 years for HDFC Bank. I think many investors would line up to buy HDFC Bank, provided HDFC Bank effectively communicates. So the operative word being effectively communicates to the investor what really happened, what are the steps that they are taking so that this does not happen again, and how far the nominations committee goes ahead and gets a credible name as a chairman of the bank.
Yeah, so that we'll get better clarity on in the next couple of minutes, maybe as that con call starts. But Aditya, Rahul, I'll come to you in just a minute. Let me close this. Aditya, would you buy at this point and say the stock falls 5-7%? I know you've been a big bull on HDFC Bank, very vocal. Talk to us whether you would buy at this point. Aditya, that's for
Yes,
you.
absolutely. It's a system. Yeah.
Please.
Absolutely, I would be a buyer. I would like to see the management come out and at a price to book value of 1.3, 1.4. Effectively, that makes it the top stock for me within the banking space. Purely from a valuation perspective, I don't think there are major corporate governance issues. There are some issues here and there which could elongate the recovery process for HDFC Bank. But over a longer period of time, the seeds of the bank are really very strong. The seeds of the merger are really very strong. It just took some bit of time, 2.5, 3 years, for the merger to fructify for the bank. I think if valuations derate, I would rate it as a top stock with respect to valuations, purely because ICICI Bank, which is doing extremely well, is really very expensive.
I think the bigger concern is what could be the collateral damage of HDFC Bank, if at all. While, of course, sources are indicating that this was because of citing a personal reason, and that's why Atanu Chakraborty actually stepped down. But having said that, till the management doesn't come on record, like our experts as well are saying, I think there will be a little bit of panic in the market, which in any case is looking brittle. I mean, look at the global handover this morning, for instance, or for that matter, what the GIFT Nifty is indicating. Kunal, what is your sense? HDFC Bank, of course, is a standalone case. But the fact of the matter is that private banks across the board have not been in great shape.
Yeah, they're not.
The last thing you wanted was this news.
Yeah, so, again, I think it's the entire scenario of the last 1.5, 2 months, 3 months, where you saw 2-3 major private sector banking stocks taking the heat. And, there was a bit of a relief in the last few days because there was a point where it looked like that maybe the selling has gone to the excess part for the private sector banking names. There was a relief rally of sorts. So maybe there was a sense that maybe these stocks could probably have seen the worst and now they could be in the process of bottoming out. But I think these news flow which keeps on coming for the stock price keeps the stock under pressure, under check for a prolonged period of time.
Okay, the initial rates, of course, this is just the first flash. Let's not react to that, but still it's indicating a downtick straight away of 10% on HDFC Bank. 758 for HDFC Bank as we speak. And even for the Nifty, it's quite the scary picture. Of course, these rates are going to settle down. It's not going to be that 4.5% cut that you're seeing on the Sensex. But 2.6% lower is what we're working with and starting off the day with. I mean, this, of course, is coupled with the kind of weak handover across the board that you had from US equity markets, or for the matter, that it's all a sea of red across the Asian screen as well. Japan once again is knocking down and completely undoing its rebound from yesterday, down about 1,300 points. Hong Kong is getting thrashed by about almost 367 points. And similar is the picture with Shanghai as well, which is down about 1%. Kunal, let's revisit what your Nifty strategy is, coupled with, of course, weakness that's going to come in from the Nifty Bank this morning.
Yeah, so I think now we are looking at the big range of 23,000 to 24,000. We discussed this also, that there is a strong probability that the Nifty would probably try and just about test the 24,000 mark, but take resistance from those levels. Same I expect on the downside, that we are looking at 23,000 as a fresh support for the index. Hopefully, I think if there are not too many negatives across the globe and across the domestic front, then we may probably expect that we may try and absorb this kind of a corrective phase, at least at this 23,000 mark. But then largely, I think this is the 1,000-point range which one has to try and grapple with as a short-term play. Yes, the range is quite big, as compared to the previous ranges of 500 points broadly. But then that's how it is because of the kind of news flow the markets have been surrounding with.
Rahul, how will you look at the public sector banks like an SBI, Bank of Baroda, PNB, Bank of India at this point in time?
So I think entire PSU as a basket, be it the large banks or the smaller banks in terms of size, I think all of them, if you look at it since last 2 years, the quarter-over-quarter, the numbers have been strong, and none of the quarters they have disappointed in a major terms, even if it has been. So last 2 quarters for all the large PSU banks, as you pointed out, have been pretty strong. So I think in all round, if you talk about the retail credit, if you talk about MSME, if you talk about the wholesale lending, in all sector, talk about the asset quality, all around, if you ask me, then all around they have done very well in entire space. So I think the valuations are justified, and stocks have not done major in terms of, if you look at it in last 1 year's perspective. So I think risk to reward, valuation, and the stability of the most of the banks looks very interesting to me. And I think if any corrections or at this juncture also, I would be a buyer in all the PSU banks.
If we revisit what could be the impact on the Nifty, and we'll bring out that table for you there, because HDFC Bank has roughly around 11.8% weightage on the index, and if with a 10% impact, if it's so, we've made some scenarios there for you. If HDFC Bank falls by 7%, then there's a nearly 197-point impact on the Nifty there, and Kotak, Axis and SBI will also have an impact because there's a rub-off effect for other banks. So a large part of today's Nifty fall would be led by banking stocks, private banks specifically. And in Nifty Bank is going to be much more deeper cut because HDFC Bank has roughly around 19 to 20% weightage there. So keep a lookout for that, and you have a Sensex expiry coming in, so there's going to be huge volatility there as well.
Yeah, absolutely. Across the board, you are looking at weakness. But I think, Rahul, the question is, start of the war, one was heavily tilted towards PSBs. They're cheap. That's where growth is. Would you use this decline, and should it come, it seems like it will, and across the board pretty much on banks, would you deploy this weakness to buy into any of the names?
So I think, as I pointed out, I think if you look at the large banks, I think what we are looking at is where the markets have been, and I think markets have been hammering the small and the mid stocks. So I think even in the large space we have seen the hammering. So and I think the valuations of the large players have also become quite attractive. So I would be a buyer. Post call, what HDFC says, I think I would be a buyer in HDFC. If you ask me, ICICI in a private sector bank, stock has done nothing in terms of the returns, but I think the balance sheet has just become stronger and stronger. Thirdly, I think PSU banks, as we discussed, the large PSU bank, maybe SBI, Bank of Baroda, PNB, all of them. So I think any weakness in it, maybe we might see some kind of a weakness as the markets have for 1 quarter or so. But I think for a even year's perspective, all of them looks very good opportunity to get in at this juncture.
Okay, and Rahul, give us a perspective. Today, of course, the markets will largely look or stare at a negative bias. What is it that you would use this dip to really buy in terms of an opportunity? Anything and any sector, space, stocks that you can recommend?
So I think two, three things. One, obviously, banks were detailed and we were discussed in detail. So that's one of the sectors. Second, I think what I feel is I think domestic play like cement and metals. I think cement, because of the crude prices, the stock have corrected and the large players have corrected, I think 12 to 15% like Ultratech. And I think looking at the demand and looking at where the things have been, I think the cement looks very well poised to get into at this juncture in this fall, and obviously would stick to large caps like Ultratech. Secondly, I think metals. I think metals had a fantastic rally in last 1 year. If you look at it, entire metal as a play. But I think if you look at the Q3 numbers, I think ferrous, non-ferrous, both. I think the outlook.
Interrupt you there. HDFC Bank on call has started. Let's cut right across.
We also have